Good morning, good afternoon, good day. Welcome to my live market meeting, Graduates Club meeting, 18th November 2020. If you can hear me and see my screen, you may kindly let me know using the live chat panel. I'll continue. I am Sagar Nandi. I used to work in information technology. I have retired now. I'm swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. This is my website sakarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sakarnandi. I regularly share live market and stock analysis on these channels. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. This is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I will use the same systems that I use for my live trading. I will use Q Elite and Q Global for technical analysis, Q Vital for fundamental analysis, Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. That was the last slide of my presentation. I'll continue with the live system. Let's look at the global markets first. Hi Mike, hi Harry. The Australian market, after it broke out of the sideways range, it is continuing to go up. It is too overbought to buy now. The optimal buying opportunities were at this point when the bull release signal appeared. The weekly is bullish now. You will see, I think from the previous webinar itself, most of the global markets are not sideways moving anymore. Most of them are in an uptrend. Japanese market, Topix index, also broke out of the range in an uptrend, though here the weekly candles for last 2 weeks have upper tails. So it is not as bullish as the Australian market, but it is still bullish. Broke out of the range and maintaining that price gain. China market, CSI 300 index. In the last webinar also I mentioned that it was not as bullish as the other markets. It did break out of the range. However, the breakout has been muted. Since then it pulled back little bit, created a doji indecisive shape candle today, resting right at the trend line support. Weekly backdrop color is bullish. If it can go up from here, giving a bullish flow candle, that may give a go with flow long trade setup. If not, in the index, we may use that opportunity to buy fundamentally strong stocks. FTSE index, UK market. It turned up from being in a downtrend, broke out of the trendline resistance, and it is holding on to the price gain. And India's Nifty 50 index, it was the most bullish of all the global markets, and that is continuing. The slope of the price move in the weekly chart increased, showing that the bullishness sped up. It didn't slow down. In the daily also, it is clear that it is moving up strongly too overbought to take a new long position. The last buying opportunity should be when Nifty was at this local low point. All the global markets are in an uptrend now. What about the USA market? Let's look at that using Q Elite on TradeStation using the market ETFs. S&P 500 ETF SPY made a new all-time high 1 week ago. However, that week closed a little bit lower, and so far this week is creating an indecisive doji candle. It is clearly bullish, overbought because it is near the upper boundary. We will not buy now, and there is no short setup, of course. There are memory trendline supports in the weekly and daily. It will not be easy for price to suddenly break down from those support levels. Uptrend but overbought. Nasdaq ETF QQQ, this was not so bullish as SPY didn't make a new all-time high 1 week ago, and this week's candle is remaining inside the trendline resistance and trendline support. Previous week also closed between that triangle pattern. In the daily, there is a trendline support. Price is right at that support. If it breaks down from the daily memory trendline support, then you may look for shorting opportunities in fundamentally weak stocks, tech stocks probably. DIA, Dow Jones Industrial Average ETF. This is similar to SPY, made new high. The candle shape is more bullish than SPY. Yesterday's candle shape was also bullish. At the upper boundary level, therefore overbought, we may not buy now. If you are following my previous webinars, live YouTube sessions, then you would know that I suggested these local lows to be the buy points. Along the way also, you could buy some stocks that were going up from local low points. Now price has gone up for many days, straight up from lower boundary to upper boundary level. It was a wild swing up move. Now also there may be buying opportunities in individual stocks, but we have to be more careful. This week I shared a post on my site sakarnandi.com explaining that when we are buying individual stocks, when the market, that is SPY or DIA, are already overbought, then we have to be extra cautious. You may have a look at that post if you have not looked at that. There is every reason to be extra cautious when the overall market is overbought as seen through the market ETFs. Of course, individual stocks and individual industries may be in favor because of industry rotation. We will always have buying opportunities, but we may be selective. I shared several buying opportunities in recent days. In fact, in last 1 or 2 weeks, probably 80-90% or more of my trade ideas were on the long side. From when did I start that? From around this point. And most of those trades gave moderate or very high profit. We may look at some of them, review some of them from Traders Forum. Before that, let's look at the market a little bit more. IWM Russell 2000 ETF, it is the strongest. That is shown by the relative performance sharply going up. The weekly candle shape is also most bullish. Yesterday's candle shape is bullish and it was a reversal candle. A reversal candle is always more bullish than a normal candle. And yesterday price hit the memory trend line support in daily and precisely went up from there. IWM was stronger than the other ETFs for a few days. Therefore, if you had noticed the trend line support in the daily, then using fine-tune chart, you could take a long trade right at the bottom of yesterday's price move using fine-tune chart, and that would give significant profit for a day. All the market ETFs are bullish, QQQ less than others. The market ETFs mostly are above upper boundary level, overbought. Therefore, it's bullish, but we may be careful when selecting individual stocks. What about oil and gold? Let's look at oil, USO. Continuing to move sideways in the weekly chart. In the daily, continuing to move inside the triangle pattern formed by resistance memory, support memory. This was what we saw in the last webinar also, weekend webinar. Narrow range sideways move. No trade setup in oil now. Gold ETF GLD. In the last webinar, I mentioned that it was moving erratically, also moving sideways, right in the middle of the sideways range, not a place to take long or short either trade. So we will not take any trade in gold as well. Now, last couple of days, in this week, the market has been bullish, but the big cap stocks didn't do so well. Is it only big cap tech stocks or in general big cap stocks? We may try to get some idea about that from market breadth analysis. Market breadth analysis does not give trade signal, but it gives background information. Let's look at the market breadth using Nasdaq composite, NYSE composite, and also look at S&P 1500. S&P 1500 is important for us because Q edge is also based on S&P 1500. We see that Nasdaq composite is right at trendline resistance. NYSE composite index is more bullish, approaching the previous all-time high. We saw SPY made a new all-time high intraday basis 1 week ago. However, NYSE composite didn't do that. It is catching up. It may make that new all-time high soon. What about S&P 1500? Very broad index, much broader than Dow Jones, much broader than Nasdaq 100, and even broader than S&P 500. This is also quite bullish. It took out the high made around February, whereas NYSE composite has not taken out the high made in February. Nasdaq has of course taken out the high made in February, Nasdaq composite, long time ago, and now it is moving sideways in a triangle pattern. So for the recent couple of weeks, this is a weekly chart of the three indices. In the last couple of weeks, S&P 1500 is quite strong. NYSE composite, very broad index, is also very strong. Nasdaq composite index bullish but not so strong, right at trendline resistance. If we look at the other internals, that is new high low up, new high low advanced decline up down volume for the Nasdaq composite, all are bullish at the right edge. This week is not complete yet. We are looking at up to Tuesday's market close data. New high low is positive, advanced decline is positive, up down volume positive, meaning more stocks are making new highs than new lows, more stocks are going up than coming down, and there is more volume in the advancing stocks than declining stocks. That is the picture for Nasdaq. And the same picture is visible in NYSE also, making new highs more than new lows, more stocks going up than coming down, and stocks going up with higher volume than coming down. However, if you look at S&P 1500, which is less broad than Nasdaq Composite or NYSE Composite, less broad, their new high low is more. However, advanced decline is negative. Up down volume is positive but much smaller compared to NYSE and Nasdaq Composite. What does it show? It shows the more we go from broad index to narrower index, less stocks are going up. That is why S&P 1500 advanced decline is negative, though the market is looking pretty bullish. Now we have several other market indices other than S&P 1500, NYSE Composite, Nasdaq Composite. Those are narrower. That is S&P 500, Nasdaq 100 and Dow Jones Industrials. What do you think we will find if we look at new high low, advanced decline, up down volume of those three indices? Let's find out. I am expecting there the advanced decline to be less bullish, because that is the pattern. More we go from broad index to narrower index, advanced decline is weakening. Let's look at that. This is now a market breadth study, but using Dow Jones Industrials, Nasdaq 100 and S&P 500. Very widely used indices and much narrower. What do we see? For Dow Jones Industrials, new high low, break even, so it's not more bullish. Advanced decline, pretty bearish. Up down volume is also bearish. Nasdaq 100, new high low is positive, meaning some stocks that were at the very high, they are continuing to move higher. However, advanced decline and up down volume both are negative, meaning more stocks are going down in Nasdaq 100 and they are going down with higher volume. And S&P 500, again, some stocks are little bit more stocks are making new highs. That means stocks that were very strong are continuing to be strong. However, under the hood, advanced decline being negative, we know that more stocks are going down, and up down volume being down means the down stocks are moving down with higher volume. So this completes the market breadth study, starting from NYSE Composite to Nasdaq Composite to S&P 1500 to S&P 500 to Nasdaq 100 to Dow Jones Industrials. And we see the same pattern. The more we move from broad index to narrower index, the market is not so bullish. This clearly shows that some of the large cap stocks are not doing so well, and the large cap stocks not only in technology, not only in Nasdaq 100, but large cap stocks in S&P 500 as a whole, which has tech and non-tech stocks, and even Dow Jones Industrials. It is not so bullish as the overall market is. That also tend to show that the stocks that were smaller cap and probably weaker earlier, they are moving up. That may be due to sector rotation. And let us look at the sectors now using Q edge. If we look at the, let me scroll a little bit to the right. If we look at the sectors, industries and stocks from 1 month to 1 day, then we see 1 month is still very bullish. 10 days, 5 days, even up to 2 days, if we include Monday, Tuesday both, it is very bullish. And yesterday is balanced, neither bullish nor bearish. So we can see that market breadth seen through sector advance decline, industry advance decline, stock advance decline is still pretty bullish. There is no sign of bearishness. Yesterday was mixed, not bearish, mixed. 6 sectors went up and 5 went down. Out of the sectors that went down, utilities went down by a large percentage. The other sectors went down by very small percentages. On the other hand, several of the sectors that moved up, they moved up with pretty large percentages, relatively speaking. They are in energy, which was lagging for a long time. Consumer discretionary, some of the consumer discretionary industries were also lagging, and we may look at communication services also. The sector rotation, if any, will be clearer from the sector scorecard that is calculated in real time. Let's focus on the monthly periods, month 1 to month 12, and sort by M1, 1 month period. You may sort by double clicking the column header and double click again to reverse the sort order. I will keep the strongest ones at the top. And now we can see energy is clearly moving in favor. The sector rotation could not be seen more clearly probably in any other tool. Over 1 month it is the strongest. Just if we step back a little bit, even over 3 months it is the weakest. And of course over 12 months, 11 months, 10 months, 9 months, all it was the weakest. However, over 1 month it is the strongest. Not only that, from 1 month to 1 day onward, it is the strongest. The other sector that is rotating in favor seems to be real estate, which was relatively weaker earlier and now it is strengthening. Same is true for communication services. Utilities has been weak for a while. Healthcare was stronger earlier, now it is weaker. And information technology, relatively speaking, over 12 months, 11 months, it was very strong. Now it is weaker, but it is holding steady at the current level for several weeks, neither moving up nor moving down. Now sector level is very broad. If we wanted to see which industries are rotating in or out of favor, we could go to the industry scorecard and let me first sort by monthly period. Month 1 period, and now we can see the industry rotation taking place in, let's say, these industries. Which are they? Leisure facilities. Let's look at some of them. Hotel, resorts, rates. These two were very heavily negatively affected by COVID-19, and now for a while they are pretty strong. Department stores was also affected by COVID-19, and oil and gas drilling was also affected, you may say, because people were not traveling so much. So the industries that are rotating in favor were all affected by COVID-19. Now it has started coming in favor, and if you looked at the sector industry rotation every day, you could do that using real time also. You could buy some of the stocks at a very low price level, and those would be the best buying opportunities, hands down, I may say. Why? Because several of those stocks would be undervalued, plus they would be showing earnings growth. Those are the best buying opportunities, not only for swing trading. You may take them as swing trades, you may also take them as longer term trades, position trades, or even longer term trades. The key to that success is to find stocks that are undervalued and then starting to show earnings growth or even if the earnings growth is not very high, it is improving from more negative to less negative, or even more negative to positive somewhat, or it may be even high earnings growth already. Those are turnaround candidates. If you find an industry that is rotating in favor and then find a turnaround candidate in that industry, then those will be the best buying opportunities. I shared several of them in the recent weeks. Let's have a look at them. They are in the site sagarnandy.com under Q360 degrees trading techniques and ideas, where I usually share live analysis ideas. Let's look at several of them which has hit the profit target or stop loss. Not many has hit stop loss, mostly they hit profit target. And the secret of that trading technique is that using Q systems, I am doing that and all of you are probably doing that, aligning the fundamental, technical and industry strength together, and we are buying when the market is bullish, not breaking out, but market is starting to move up. From that point we are starting to buy, and when market is bullish, buying. When market is not bullish, not buying, maybe even shorting. This was a trade idea I shared 8 days ago on AGNC. Let's look at the 360-degree snapshot. The mortgage rates industry was turning around. This is how turning around looks like in real time using QH. This is a snapshot I shared at 3:46 p.m. New York time. Clearly the industry was weaker earlier, and the pace column was showing it was not only strong but it was also accelerating. I looked into the industry and I found a stock, and this is an undervalued stock, AGNC, with earnings growth. Earnings growth not only in the last quarter, but you can see it is gradually moving up from 9.6% to 18.4% to 37.3%. Pays a very high dividend, 10.1% dividend yield. On the day I shared it, it was moving up, it was up by 5%. We saw the relative score was high from QH, and we can see in itself also 83% of the 75 peer stocks of AGNC were up. How did the chart look like at that time? It gave a breakout trade setup in the daily chart. I'm using the Q Elite at a glance template, weekly, daily, weekly on the left, daily on the right. It was a breakout setup, breaking out of trendline resistance with bullish pressure and extremely high volume. Weekly was supported by trendline support. Daily also had a trendline support some distance away. The weekly had a bullish shape, bullish backdrop color candle, and it regained the yellow direction line in weekly. That was as good a breakout setup as one can get, and it was coming in a fundamentally strong stock in an industry that was turning around. If you analyzed it using real-time Q systems, you could buy it somewhere here. You would not have to wait till the end of the day. Let's see how AGNC is today. I'll use Q Elite on Trace Station. Since the time I shared the breakout idea, which could be entered at this point, the stock has steadily gone up. Yesterday also it ended with a pretty bullish shape candle. The weekly is continuing to go up because it has been, it is above the upper boundary level and overbought, and I think the risk distance has been covered already. Partial profit could be booked. Because the technicals are very strong, fundamental is very strong, there is no reason to exit full position. guideline is that once the initial profit target is hit, if the stock is looking bullish, there is no resistance nearby on technical charts and fundamentals are still strong, then there is no need to exit full position. That is what you could do in AGNC, a very profitable trade. In this case, a breakout trade setup in a turnaround industry. Let's look at one or two more examples. And when I shared the ideas, many people are, at least those who are not using Q systems, they sometimes think it is a bit early. And I like that idea because by the time other traders are saying this stock, for example, KSS is bullish, I am already booking profit. I shared the buying idea on calls KSS in the weekend market roundup of 14th November. That time the weekly backdrop color was bullish. The daily gave a go with flow long trade setup. Every trade setup in Q systems, they are associated with unambiguous checklists that are based on colors basically. You don't have to look for divergence, convergence, you don't have to look for parameter crossing some threshold or indicators crossing threshold setting parameters. You just look at colors, you apply the checklist, and in KSS there was a go with flow trend following long setup. I traded it at that time. In the last webinar I mentioned I used options and stocks together. I booked partial profit already, so I clearly remember how I traded it. Let me explain that using the live charts and see also how it has moved since I shared the idea. Calls KSS. I shared it on this day when the daily flow color was bullish, cyan. That was the trend following long trade setup. I at that time bought the stock and also shorted the put. I bought the stock, I shorted the put, and I shorted the put. I found later when closing the trade, I shorted it at a pretty low level here at this watermark resistance. So bought the stock, shorted the put, and bought the call. No, sorry. I didn't buy the call. In the last webinar, I mentioned I might have bought the call. I didn't. In this case, I bought the stock and shorted the put, very out of the money put. Next day, stock moved up sharply, and that was the day just before earnings day. So I already sized my stock position to the level that I wanted to buy. So I didn't want to continue to hold the short put. Why? Because in case the stock dropped, I would have to buy more shares in the stock that I didn't want. The short put leg was at 25% or so profit on this day, and I closed the short put position. What did I have then? I was left with long stock position, long stock, and earnings was coming out very next day. So what I did, instead of just keeping the long stock position, I sold some out of the money call and I used the 30 strike, the trend line resistance strike. Why? Because after the earnings is out, the volatility will crash and the options short call position will benefit from that. And even if the stock went up, which it did in this case, the short call will lose some money. However, the long stock position will make up more than that. So yesterday I was watching KSS using fine-tune chart. Remember what did I have? I had a long stock position bought here. I had a short call leg at 30 strike, and I had already booked some profit in the short put leg at 25% of max profit. Next day, that is yesterday, I looked at cases using fine-tune chart. That is the 5 or 10-minute chart with only zero lag, pivot levels and trend lines. In the morning session, I was using 5-minute chart. In the afternoon session, I used 10 minutes. So initially, it created the early range high and early range low. Then it went up, it broke out of early range high, it was starting to go up. By this time, my short call leg was in a loss, but not so much, because price didn't move so much yet and the volatility crashed. Price didn't move so much yet from previous day's close, the magenta pivot, and volatility crashed after earnings. So the short call leg was in a small loss, not a lot, not a big loss, and my long stock position made up much more than that profit. What did I do? I closed my short call leg and I let the long stock position continue to move up. Along the way, I had very good profit. Sometimes I use this calculation. Suppose, for example, just an example, I want to hold a stock position that is valued at $10,000. So initially, I might have placed my trade. I have $10,000 position in calls, and then it went up over several days. That position may be now worth, let's say, $12,000. Maybe the stock went up by 20%. Then I may book some profit to make it $10,000 again and take some money out of the table. So yesterday I used similar calculation to book some profit in the long stock position. The stock was looking so bullish, I had no reason to try to exit more position. This is the weekly daily. The weekly as of Tuesday's close has regained the yellow direction line. The daily has regained the white direction line. Yesterday had a very bullish shape candle, bullish pressure. In fact, bullish pressure is there for 3 days in a row. Very high volume. How is the fundamental looking now? Let's look at that. Because I would like to look at fundamentals, industry and technical both before deciding the next course of action once a stock is in a nice profit. How much profit is there in the stock? Let's find out. From the close of the day when it gave the go with flow long trade setup to yesterday's close, it is 21% profit in 2 trading days. And remember, I also had some additional profit from the short put position. If I look at the fundamentals, and let's look at the industry also. Industry rotation, I am looking up from QH. It is looking very bullish, continuing to look very bullish, the industry. In fact, yesterday it was the strongest industry. Score 147 out of 147 industries in QH for USA market. QH can be used for other markets also, all the major markets, UK, India, China, Australia, etc. For USA market, 147 industries. Department stores was the strongest yesterday. There was no reason to book too much profit in the position. And if I looked at the stock, it is still undervalued stock. The best possible valuation score has a short squeeze potential. So there was no reason to book too much profit in the trade. I managed it pretty well, I think. Initially, I took a short put leg, not there, here, pretty far out of the money. So if I had to buy it back because of short put assignment, that would be at a very low price, and I thought there would be a high chance that price would stabilize or start to move up from there. That's why I sold the put out of the money. Then I booked the profit in short put at 25% of max profit just before earnings, because I didn't want to be assigned ending up with more shares than I wanted. Instead, I booked profit on the short put and sold out of the money call to take advantage of the volatility crash after earnings, and in case price fell down, it would probably stop at the trend line support, and the short call would give me a lot of profit. That was the reason, two reasons why I shorted the call just before earnings. And using real-time chart, I think this I did very well. I closed the short call leg and let my profit run on the stock long position. I ended up with good profit, and I booked some profit so that my KSS position dollar value is in line with what I would like to hold in a stock. Again, when I shared the idea, many people might not have thought of trading it. I traded it with confidence, with narrow stop loss, and I used options to mitigate my risk. What I keep on mentioning, that I use options not to increase my profit, but to manage my trades more efficiently. I am not taking speculative calls out of the money to make a lot of money from an options trade. I am shorting put, I am using verticals, or I am selling calls out of the money as a part of covered call, and those are not meant to make a lot of profit. Those are strategies that can be used to mitigate risk, to manage a trade more efficiently. Let's look at one more trade idea that I shared recently. And I'm not picking and choosing. The first one I didn't go through because that is one that I shared yesterday. You may look it up. We don't know how the trade is going to play out. Let's look at this one. This is an interesting post. Q trade setups are based on unambiguous checklist. So what I do and what is the standard guideline is, if I am identifying a trade during market hours, I want the signal to be confirmed by the end of the day. When did I share this? This was on VRTV. I shared it 2 days ago. And let's see, when did I share it? I shared it in the morning session, pretty close to market open. 9:30 a.m. the market opens. I shared it at 9:45. At that time, the trading companies and distributors industry was very strong, relatively speaking, and it was accelerating, one of the most accelerating industries. And I could just use a few clicks in QH to find out the strongest industries in QH and then drill down to the strong fundamental stocks. And I found this one, great valuation, the best possible valuation score, cyan color is enough, and excellent earnings growth, more than 300% earnings growth, with great earnings quality and short squeeze potential. In itself also, the industry was very strong. 92% of 48 peer stocks were up. And this is what I found very close to market open. At that time, the daily, weekly, these two charts were giving a trend following go with flow long trade setup. Daily had higher low, higher high, bullish flow candle. Weekly color was cyan, bullish. That met all the requirements of a go with flow trend following long trade setup. Interestingly, if you look back earlier when the bullish headwind came, you could buy the stock at the lowest possible price point. Once again, the headwind signal was pretty useful. If you didn't buy at the headwind signal, another technique is to use the first bullish flow that comes after headwind signal. So maybe this candle. You could buy it on this candle as well. Of course, you would look at fundamental industry also at that time. That is the Q technique. Now I shared it on this day near the market open. And in fact, I took a position using fine tune chart. So in Q technique, either we are going to take a trade near the market close, or Like in this case, we may take a trade using fine-tuned chart when we see a possible trade setting up in the morning session. However, if the trade signals are not confirmed by the end of the day, then we should not hold on to the trade. Now, I'll explain how I traded it, but let's go through the post. This is what I shared in the morning session. However, by the close of the day, the same day, the price pulled back. It ended with a long lower tail candle in the daily chart that did not meet the requirements of the go with flow trend for a long trade setup. So if we were waiting for confirmation at the end of the day, though price went up by 5.2% from a close to close basis, and is this magnification not making it easier to look at it? I sometimes spend time to make it easier for you to read. I hope that is useful. Though price went up by more than 5%, not a small percentage, on a close to close basis, the Q go with flow long checklist would not allow us to take a trade at the close of the day. Now I took a position during the day and I exited the trade with a small profit, and that could be easily done. Let's look at VRTV. I shared it Monday in the morning session. So let's look at fine-tune chart. Let me see in here Monday. So on Monday, price opened higher and then went above early range high. So I took a long position right when it was breaking out of early range high. Remember, I shared the post also around that time, 9:45, 9:50, around that time. Then it went up. However, after that it was starting to come down. So when I do under such circumstances, I book partial profit and I wait. If it goes down further, I always make sure that I'm exiting the trade with a small profit, not with a loss. And that is what I did. First I exited partial position with a profit and held on to the remaining position, but as it was continuing to go down, I didn't turn the profitable trade into a losing trade. By the end of the day, I had no position, I had a small profit. And that was a very good idea, because next day the stop gap down at open. It opened here, early range high, early range formed, and it gave actually a gap short day trade setup. The entry would be at this point, stop would be just above early range high. Stop was never approached. Later on it went down, and when it came to the Q pause pivot line, more than risk distance was covered and you could book profit as a day trade. Gap short or gap long are day trade ideas, and you could take a gap short day trade. If price reversed after gap down open, you could have a gap long day trade setup, but that didn't come. I was watching for that because the stock was fundamentally very nicely valued. And how was the industry yesterday? VRTP had a sharp drop yesterday. I think it went down by how much percentage? Let's see here. When I shared the post in the forum, minus 14% down, but I think it closed about 16% or so down. How was its industry? I think fundamental will be okay. Fundamentals don't change every day other than valuation score. VRTV.K or O. Let's try. .K. Trading companies and distributors. Let's check its industry score. Yesterday the stock had a severe down move, and in fact yesterday the industry as a whole was also very weak. So I might have looked at that also to exit the, okay, I exited one day earlier itself, but yesterday there would be no reason to try to buy into the trend. Let's look at Vital. The industry relatively was very weak. In itself it was not so weak, Yesterday we saw overall market was balanced and industry as a whole was also balanced. 50% of the 48 peer stocks went up. So the industry was not very weak in itself, though relatively it was very weak yesterday. Anyway, it didn't give any buy trade setup yesterday, so we would not look to buy. This example again illustrates that if we just follow the Q unambiguous checklist, that not only helps us make a lot of profit in cases like KSS, AGNC, and so many other ideas that I shared, and I'm sure many more ideas you find yourself, not only helps us make profit but also helps us keep out of harm's way. Now, in fact, if the stock comes to this trend line support around 15 or the next trend line support, which also has a watermark support around 14, that may give a very nice bounce long setup. Fundamentals are good. Why did it drop then so much? Okay, it can drop for many reasons, but in this case it's dropped because I think there was a secondary offering. Fundamentals didn't change, they made a secondary offering. So I will not mind buying the stock at these supports, probably here or here. It may not come down so much, but we'll see. If there is a bounce trade setup from any of these supports, memory trendline supports or watermark support, the lowest one, then I may look for a low risk buying opportunity again, provided the industry is also strong at that time or accelerating at that time. Let's look at Q Finder now to see how the week is so far. Q Finder is the unique tool that shows the balance between bears and bulls using all the important Q signals and trade setups. And this is the Q Finder weekly meaning up to Tuesday's market close. All signals are pretty bullish. 85% of all signals are bullish. 98% of strength signals are bullish. 85% of trend continuation signals are bullish. Only reversals are more bearish, 72%. So if I am going to look for a bearish setup, I may look for a reversal bearish setup, meaning either a headwind bearish setup or box reversal, bounce or touch. I will not look for a short setup that is probably breaking out or go with flow. But you may combine different signals also using this Q Finder tool. Let's look at Q Finder daily, that is yesterday's close. We saw the yesterday sector industry stocks were balanced, and that is visible in Q Finder daily also. Yesterday 54% of all signals were bullish. Strength signals were more bearish because of many gap down moves. Trend continuation signals overall more bullish, and yesterday reversal signals were also more bullish. So whether we look at the market ETFs or market breadth or Q edge insight or Q Finder insight, market is still bullish. It may be overbought, however it is still bullish, and we saw from detailed market breadth study starting from Nasdaq Composite to S&P 1500 to 500 to Nasdaq 100 to Dow Jones Industrials that large cap stocks are relatively speaking not doing so well. So you may buy into small cap stocks, and the industries that are moving in favor now, we saw them like the laser industries, etc., laser department store. There are many not so large cap stocks in that group. You may try to find buying opportunities from there. We have some time. Let's look at another trade idea that I shared in the forum, and it is always good to look back and see how the technique is working. It's not important that every trade has to make profit. For stock swing trading, we have an approach. That approach is available here. It says that we need only 60% success rate with 1:1 or better reward risk ratio. The actual success rate of the trades that I share in this category, I think you will find out much better than 60%. And I shared an airline stock, Mesa. Again, when I shared the idea, was it Mesa? Okay, I might have shared it in the YouTube live session. Let's look at the stock Mesa. And in the daily chart, I am using hotkey Control Shift M to show me the historical trend line support and resistance. On this day, when it broke out of trend line resistance with heavy pressure and very high volume, the weekly was already bullish, so I took a breakout long trade setup in Mesa, a South American Airlines. I took it at the or near the point of breakout using fine tune chart. That day ended with a large gain, though there was an upper tail. My position was already in a profit. The industry was very strong so there was no reason to exit the trade. I held on to it. It moved sideways for 2 days and then it went up again. When it went up on this day, it gave a go with flow long trade setup. So you could buy it as a breakout trade on this day, or you could buy it as a go with flow long trade setup on the next day. I bought already as a breakout trade setup, as I mentioned in the YouTube live session at that time, and since then it has rapidly gone up. Let's see how much is the profit if you took it from around the breakout point. I'm not using the exact breakout point, but I'm assuming the entry was a little bit higher than that, and up to yesterday's close it has 24% profit in 1 2 3 5 trading days. This is another very profitable trade like KSS. Now it doesn't matter whether a trade gives 20% profit in couple of days or it gives 5% profit in a couple of days. So long as it hits the initial profit target, then as I said, there is every reason to make some money from the market. There is no reason to not make money. So this was very profitable trade again. I am holding on to the position. It's a very low price stock. If I look at the weekly, it had a sharp drop. Then it made a very long base. The more base it makes, the higher it may go up. Of course, I have very large profit, 24% profit already in the trade. I'm never going to let it turn into a loss. Now, Mesa doesn't have so liquid options, so I couldn't manage my position with options, meaning now it is going up. Now it is overbought, shown by the stretch band indicator. If it displayed a bear release today, then if options were liquid, I could sell an out of the money call and I could buy an out of the money put to manage my position, or at least sell the call if didn't buy the put. But that I may not be able to do for Mesa. I'm holding on to the stock position. Now when I bought it, technically it was a Q breakout trade setup, and let's check its fundamentals, because I would not buy without combining the forces from fundamental, technical, industry. Let's look at fundamentals today. Fundamentals might not have changed. The valuation score would have changed because the stock went up by more than 20%. But let's see how it is now. It is still very undervalued, still has a short squeeze potential. And this is what I was mentioning. You don't have to always buy high growth stocks. Undervalued stocks do fine. In fact, a series of tweets that I am sharing from time to time, they show that for short-term trading, the best movers tend to be more undervalued stocks than high growth stocks. For longer term holding, the high growth stocks may do better, but for short term trading, for last several weeks study shows the undervalued stocks are doing better for short term trade. So the fundamentals are good. That was a reason I bought it. And let's look at the industry today. When I bought it, I'm sure the industry was strong, and now it is mixed, neither coming down nor going up. So I have a stock with a good profit. Fundamentals are great. The industry is not coming down. So I am holding on to the position. Even if the industry weakens, my action will involve putting a trailing stop, probably using the Q protection signal. And if I change the template, see my entry price was somewhere here. And currently the Q protection signal is here. So even if I apply trailing stop, I will ensure a large profit already in the trade. So I have no reason to prematurely exit the trade. I'm continuing to hold the trade. If there is a bear release signal, I will keep an eye on it. Now I can see today also in the overnight market it is up by 5% plus. So I have no reason to quickly exit the trade. At, at most I will just apply trading stop. We are at the 1 hour point. Let's end today's session here. I thank you a lot for joining, and I look forward to seeing you in our next session that will be during the weekend on YouTube Live. I'll announce the time on my Twitter page. Thanks a lot again. Keep safe. And as you can see from all the ideas that I keep on sharing on the Traders Forum, there is absolutely no reason, I may say, not to make some money from the market. Trade profitably and take care. Thank you. Bye bye.